Most recent tariffs imposed by Biden administration, it's more target and more dramatic.
So it's disappointing to see the tariff set at such a high level that takes away consumer choice.
But why is the U.S. doing that?
The imposition of tariffs on EVs runs contrary to the Biden administration's goal of decarbonization of the U.S. economy.
So what's the price of this tariffs on Chinese?
I mean, that's going to slow down the move towards a lower carbon future.
You have a very constructive view on China, but some United States investors don't.
From the perspective of a global investor, China's country rich in opportunity.
So you are a global investor.
It's a very different mindset when you're in the Middle East and face a very different geopolitical dynamic than if you're sitting in the middle of the United States.
欢迎收看《顶级投资人去现场》。本期节目去到的现场依然是5月下旬在上海举行的摩根大通第20届全球中国峰会。本届峰会汇聚了来自全球33个国家和地区1300家企业的超过2500名参会者。摩根大通全球中国峰会是中国规模最大、最具影响力的商业领袖年度会议之一。在峰会现场，顶级投资人节目再次专访了 Citadel 城堡投资创始人兼 CEO Ken Griffin。Ken 受邀来到上海，并在峰会上发表了30分钟的主旨演讲。这是 Ken 继今年中国发展高层论坛之后，再次走进顶级投资人的演播室。Ken 本人不仅掌管着全球最赚钱的对冲基金之一，更是华尔街著名的对华建设派。所以，我们的采访就从拜登政府不久前刚刚宣布的对中国新能源产品的大幅征税开始。So, thank you, Ken, very much, and very nice to see you again.
It's great to be here. I'm here for JP Morgan's 20th Global China Summit, where Jamie Dimon has brought together a number of the world's most important investors and thought leaders for a really interesting conference on the ideas of this moment in time.
We see the most recent tariffs imposed by Biden administration. By comparing with Donald Trump, it's more targeted and more dramatic. Is that the right thing to do you think?
So the general push towards tariffs around the world, I think, is actually quite sad. The world has benefited tremendously from trade, where each country puts its best foot forward with what they do best. And the rise of tariffs is taking that away from consumers around the world. The Chinese took it upon themselves to build the greatest EV manufacturing capability in the world. And the increase in tariffs for Chinese EVs will take away American consumer choice as American consumers try to embrace a lower carbon future. So it's disappointing to see the tariff set at such a high level that takes away consumer choice from American consumers and punishes the Chinese entrepreneurs who had the foresight and the risk-taking to build an industry-leading capability in the field of EVs.
You're right. But why is the U.S. doing that?
So part of this is the trepidation that the Chinese EV manufacturers will displace too much in the way of U.S. domestic auto sales. And you can understand how, just as the United States put restrictions on imports from cars from Japan several decades ago, the United States might be thinking about how to phase in this new competitive threat from China. But the EV tariffs of 100%, I think, are really a political statement by the administration in front of an election. That's what I really think this is. So what's interesting is the imposition of tariffs on EVs runs contrary to the Biden administration's goal of decarbonization of the U.S. economy.
Regarding the climate change, so what's the price of this tariffs on Chinese EVs?
The big price of the tariffs on Chinese EVs is that we're simply going to use fewer EVs in the United States over the years to come, and that's going to slow down the move towards a lower carbon future. And we're going to impose greater costs on American consumers by not having the competitive pressure of the Chinese EV fleets being made available to the United States.
For a very long time, you have a very constructive view on China, but some United States investors don't. How do you explain your constructive view on China?
I think it's important to remember that Citadel manages money for entities, sovereign wealth funds, hospitals, universities around the world. In almost every continent we have investors from. And from that vantage point of being a global investor, one appreciates that China has a substantial number of industry leaders, whether it's in the manufacturing of solar, cellular technology, consumer goods manufacturing, EVs, so on and so forth. From the perspective of a global investor, China's a country rich in opportunity. From the perspective of an American investor, the geopolitical tension between our two countries makes China less investable.
So you are a global investor.
I wear the hat of a global investor when I'm here with you talking about China. So if I'm in the Middle East, for example, there's great enthusiasm about investing in China. It's a very different mindset when you're in the Middle East and face a very different geopolitical dynamic than if you're sitting in the middle of the United States.
You're a very successful hedge fund manager. How to mitigate the geopolitical risks on a practical level?
So on a practical level, we think about the various geopolitical dynamics around the world. So for example, the tension in the Middle East means that the price of oil could experience a sudden and profound shock. So we'll look at what will happen to the value of our holdings if oil, for example, is up 50% over the next 2 to 3 weeks. In that environment, for example, the price of airline stocks would fall. The price of cruise line stocks would fall. The price of stocks that represent discretionary spending by consumers would fall because consumers would have less money to spend, having to pay more money for energy, for gasoline. So what we do is we think about the primary price impacts that a geopolitical shock will have, and then across our portfolio, will the change in prices across the assets that we own give us a loss that's acceptable to us as we think about managing the risk intrinsic in our portfolio?
For example, the Sino-US tensions, how to modeling that?
Over the last several years, the primary manifestation of the geopolitical tension between the United States and China has been the imposition of tariffs. Yeah. So we look at if tariffs are threatened or might change, what will that do to the value of the companies in which we invest? And again, like the oil price shock, we try to conclude, are we able to bear the losses that would happen from the imposition of new tariffs, for example?
Ken, you and Jamie Dimon, the host of today's event, both warned the government debt risks at the US repeatedly. So how might the risk finally play out?
Jamie Dimon runs the most important bank in the world. And with $4 trillion of assets, he has a unique perspective on the magnitude and the importance of the U.S. government debt. And I agree with Jamie that the United States needs to bring its spending back to more measured levels. We're running a national deficit of around 6% of GDP when we have a full growth, full employment economy. This is the moment in the business cycle where, if anything, the U.S. government should be reducing its aggregate debt and not running a significant deficit. So for an extended period of time, it will simply be that the cost of capital is higher, which means companies are raising less money. They're able to pursue fewer new ventures. They're creating fewer jobs, and wage growth is not as strong. That's how it plays out in the foreseeable future. In a worst case scenario, if we don't bring our spending under control, then you'll have a sovereign debt crisis like we've seen play out in a number of countries around the world over the years. That would be a horrible outcome. That would be far down the road.
What would be the catalyst for the debt crisis?
The catalyst would be an auction that just goes very poorly. That the U.S. government shows up to raise billions of dollars in an auction like it does all the time, and there's just a shortage of buyers. You'll never know exactly what's the precipitating event that causes.
Yes, actually, what I want to know is what maybe the black swan in the future will look like.
We don't know what that precipitating event's going to be. After the fact, we'll write about it, we'll talk about it, and we'll speculate as to why that was the event. So if we think about the financial markets, when a market is overextended or is fragile, what actually precipitates a crisis is often, in retrospect, quite immaterial. I remember the crash of 1987. I was in my college dorm room at the time. And the morning of the crash, the stories and the headlines related to President Reagan's wife's health and related to a small skirmish in the Middle East between a U.S. military vessel and a small boat. Those were the headlines that day. And the market was down 20-some%. So what you don't know is what event causes that loss of confidence that creates like a snowball rolling down a mountain moment where the market becomes completely chaotic and fearful.